Okay, there we go. Let me share my screen. Let me hope everyone is seeing my screen. Is my screen live and clear? Eric, is my screen on?
Yes, sir, it's on. Good morning.
Morning, how are you?
Yangu yokunda kuteera.
Nze kasita mpisamu eriiso limu mba nkolabye.
Mema ine kwisi.
Teri kwekweka nkwano. Okay, there we go. Okay. Good morning to everyone. I think you are doing well. I wanted to first clear this thing. I normally share signals in the group, and after I share the results, and you find someone saying mine is not yet out, mine is not yet out. Why? And you are saying congratulations. Okay, so now what we need to understand, at times I may share a signal. For example, if I share a signal at this point, oh, where are you? If I share a signal maybe at this point and we fail to sell at this point, and now market drops all the way from here up to this point, I want you to get it clear. Market may drop from here up to here. So at this point, me, I'm seeing another opportunity of someone who missed this signal. I see another opportunity where to buy from. Therefore, it will not stop me from sharing this signal again. I will come here and share the signal that we are taking 3%, for example 4%. Now, for you who entered at this point, you are still in the market. But this one who came yesterday, who joined the business yesterday, is at this point, is entering at this point. There's someone having... Eric, mute yourself. Are we getting the point? For you, you entered at this point. Another one entered at this point. Therefore, for you here, you are still in the market. Are we together? Here, you are still in the market. And here, someone is out. So, if I post that congratulations, this one is out, I normally tag. I normally reply the other one that I shared recently, not this one. Meaning for you, you will be still in the market, enjoying margin calls slowly as you're waiting for the market to come back where you had bought this coin from. So you normally put line. May I normally mark like this? I put line where I bought the coin from, then I follow until we hit this line at the top. That's when I will know that I'm likely to come out today. But otherwise, I may share a coin 2 times or 3 times in a week because of its movement. But for you who entered it earlier, then it doesn't mean you also need to enter the what? The signal. No. For you, you keep with it and you just open margin calls. Okay, hope we are clear on that point. Okay, let's look at this point now. Like as we have been teaching you, but you know, every day we get new students. Every day the one who joined 2 years back is also new in the business because he has just get time to learn. The rest of years, he has been making himself busy, pretending that maybe I don't have time, yet the business is boring him. Now, what we need to understand, for us, we have to keep teaching you no matter what. We have to keep teaching you. Therefore, now, today I wanted to show you now the trends here, and we can see where we can enter from. So, when you look at this point here, this is an uptrend. This is an uptrend. Then, this is a downtrend. So, the thing is like this. When you draw line, this line is moving upwards, then this one automatically is dropping down. Therefore, this one is an uptrend. Then this one is a downtrend. Therefore, we need to understand in these two uptrend and downtrend, when do we need to trade? Now, we said that you can find a small trend within a trend. Now, when you look at this point here, where we are now, currently, it is not an uptrend, it is not a downtrend. I don't know whether you are getting the point. Here, it is not an uptrend, it is not a downtrend. We call it ranging. So you can see here, we never had lower lows, and the higher highs are at the same level, meaning they are equal highs. And remember, in the market, we said that we have this type. Market can move in this way, like this, then up, then down, then up, then down. This is an uptrend, whereby in this scenario we have highs. This is high, this is high, this is high. Therefore, whenever you find that in the market there is nothing like this, resembling this, okay, what you need to understand, check whether it is downtrend. And downtrend is like this: down, down, up, down, then up. Hope you are getting my point. Now, this side, it is for downtrend. This side is for an uptrend. The market is moving upwards. Then this one, the market is moving towards the downward side. Are we getting a point? Therefore, if you find that in the market there is nothing like this this movement, there is nothing like this movement, therefore the movement will be this. So, can you now tell me that this is a downtrend here, or it is an uptrend? What is this? It is ranging. The market is not forming highs like here and higher lows like here. Again, it is not forming lower lows like here and lower highs. It is not there. Are we getting a point? So, when you try to draw the lines here, can you see? Things are not coming clearly. Therefore, it is not a downtrend, it is not an uptrend, it is called ranging market. It is called the ranging market. Let me hope you are getting that, such that you don't always get confused. Are we together? I wanted to remove this. Remove. Okay, so we need to understand when do we need to trade here and how do we trade here. I told you we first confirm the first low, higher low, which is this one. This is low, the lowest point. At this point, it is lowest point, lower low. So, after confirming lower low, we need to understand whether this market will come back and break the previous low, low, or it will fail and form what we call the first high. So the confirmation for you to trade is the first high, which is at that point. Okay, which is at that point. So this one is not a high. No, it is what we call lower high. Is what we call lower high. Therefore, we need first understand whether here this point will break the last low, the previous low. When we fail to break, let me draw for you. When we fail to break at this point, automatically the market is shifting, or it is changing the direction from a downtrend to uptrend. Therefore, we have to confirm first in two positions here on previous lower high and previous lower low. We need to break one of those. Hope you are getting my point. We need to break either point A or point B. Is this one hard also, Wanangi? For you to confirm whether you are to trade, we need first to break point A or point B. Is that one hard? That is concerning about the uptrend. That is concerning about the uptrend. Just draw line on the previous low and draw line on the previous lower high and wait for the breakout. Wait for the breakout. Whenever you see the breakout, automatically you should know that the market has changed the structure. We are no longer interested in downtrend. We are no longer interested in uptrend. So here, what comes into your mind? Let me see whether you have got it clearly. How many? How many? I'm not seeing any comment in the chat. Are we getting it clearly, or we are totally lost? Can I see one in the chat? Can I see someone typing one in the chat? I can see Mr. Alpha. Thank you so much. I can see that you are following up. Fred, thank you so much. Nasozi, that is Kizito Eric. Okay, Emmanuel from Nigeria. Mariam, thank you so much. Okay, so from here, guys, we need to follow whether the market will break the line A or line B. Now when we break point number A, automatically we are forming another lower low. We are forming another lower low. For example, if it happens and we do this and we break it like this, automatically we need to come here and also write there lower low. Hope I'm making sense. And also draw line. Draw line. That's how we follow the market until we break the previous point B. Until we break point B. Let me rub that one. Let us remain here. Then we move on. Now, after failing to break point A, and we come back here on lower high. Remember, this was the previous low downtrend. That's why we have a lower high. It was like this in this form. Don't get confused. This was our previous downtrend. It was like this. This, then this, then this. Then this. It was like that. So here at this point, it is the final, or it is the last lower high. The way we are doing it here, it is the way we are supposed to do it here. Watch out this number, or watch out this position, which is our lower high. Keep watching them. Whenever we break, automatically that is a change of character. Okay, now what we are waiting? We are waiting for the market to form what we call the first high. The first high. Leave it. If we break here at point B, don't enter. If we break, we wait for this market to come back. Now someone is saying Banang. I'm seeing graphs. This is not graph. We need to love our business. Minus loving it, there is no way how you will understand it. Do you know doing something that you hate? You will never do it perfectly. You need to first love the business, and the rest will come at last. Therefore, just understand the art, nothing else. The rest will be simple. Setting margin calls is simple, but the hardest thing that we have, it is to analyze the market to get the coin to trade. That's why many failed to understand this concept of market analysis, because they pretend to be lazy. They don't want to learn. If you start drawing, now they will start, oh my God, now we are drawing graphs. This is not a graph. You can cram it even. You can cram it and make it. Now, I told you, immediately after breaking the line B here at this point, no entering the market. Let me hope you are picking that. We are not entering at this point. No entry. Here, no entering the market at that point. After breaking immediately, don't try to enter the market, because you don't know where it is heading. Even though we are above this point, which is lower high, but here, my dear friend, you are not sure whether the market will stop from here and drop, whether it will go at this point. You are not sure. Therefore, you will be sure after market forming this higher high point. There you can understand that this is high. I can see. So, if you can see that this is high, wait for the red candle to come back down. To come back down, the red candle will start moving towards down. Then from there, this line is working as support. We expect the market to touch this line and respect it, and we move up. Therefore, ladies and gentlemen, our entry point will be at this point. This is the entry now. Entry 1. Let us assume we want to trade this coin 2 times only. Here we are entering the coin. Where is our target? Our target should be where the market is coming from. And like I told you in previous classes, I told you, whenever we form a high, draw a line on the highest level. Put a line. The line will help us to know where we are exiting from. Now, we measure from where we entered from, targeting the previous high, where the market was coming from. Whereby now when you check here, it is 7%. So you could just put 7% in your robot, and the market will simply go there. Now, another thing, here, no entry. Immediately after hitting that target, no entry. No entry. Hope you are getting that clearly. No entry at this point after immediately breaking the previous high. We don't need to enter at this point. We are waiting for this market to first confirm the high. We need to first confirm this high. The second high, remember, this is the second high. After confirming, you will see the market giving up, coming down, meaning the market is giving up. So for you, what you do after giving up, draw your line. Leave it there. Draw it and leave it there. Let the market drop. By dropping, it is looking at this point of previous high. That's what it is looking at. And it will come back and hit this level. After hitting, you'll see the market bouncing back. Therefore, we end up saying that the entry, which is the second entry, is supposed to be at that point. This is the second entry. Entry 2. We are entering at that point. Okay? Then from there, market will also go back to this point. So meaning your take profit will be from here up to here, which will be 7.6%. I'm done with uptrend. Anyone with question concerning about the uptrend strategy, how to enter the market in the uptrend? Can I see someone asking a question or we move on?
Yes, Deus, morning.
Morning, Papa. How are you?
I'm okay, thank you for the teaching. Now, what if from the high it doesn't drop up to that lower high? What if it remains in between? What decisions do you make?
As me, if I see the reaction from the market is positive, I can enter in calls from where I entered from up to my support level. Are you getting the clear picture?
Yeah, I'm getting it.
Yes. When you see the reaction, the market is now trying to go back, minus reaching the previous support. Therefore, you can look at the clear entry, enter the market, then have margin calls up to this level. Because as any slight mistake and we fail to go up, automatically we are coming back at this level. And by coming back at this level, we expect to be having many orders at this level that will push the market back to this level. But in most cases, 90% of the market will always at least form at least two higher highs. At least two higher highs. We expect them from the market. If you don't see two higher highs, automatically that is not an uptrend. We expect to see the two higher highs and above. Okay? That's why I encourage you trade on higher low number 2, because here we have 1, then 2. Now here, I don't know, let me see, here and here. So here we are not trading, we are trading here after forming this high, because this is the confirmation that the market is shifting from downtrend to uptrend. Therefore, after forming this, we expect market to drop and we trade here. After trading here, we expect the market to break the previous high and we form a new high. We wait for the market to drop and we trade. That is the 2 times I wish you to keep following and trading. If it continues, please don't chase the market. You stop from here. Look for another coins. Coins are many. Now, let us transfer this knowledge let us transfer this image to the candles here. This is our candles here. Let me rub this one. It's disturbing us. Remember, I told you first confirm, is this an uptrend or not? What are the signs and symptoms of uptrend? Hey, cartoonist. Now we are in science. Signs and symptoms of uptrend. We have to confirm the first high in the market. Are we together? First high in the market. Therefore, we can come here. This was the last point of the market. We are drawing our line. And when you look at this point here, like I told you that here, market was trying to play games. Here. It was trying to play games. It is not forming higher highs. It is not forming lower lows. It is just there. So, here we could not take it serious at this point. Confirmation was here. Because when you look at this point here, this point is higher than this point. Meaning, this one can't be an uptrend. This one is just a trap. Because if it was a real uptrend, we couldn't get this one again. So now, me, I'm trying to consider this. This was a downtrend. This one from here up to here, we can see lower lows, they are there, and the higher lows, they are there. So therefore, this was our first, our last lower high at this point here. Where? This was it. Lower high. So I told you we draw line on lower high. Draw line like this. We draw line. The lower high should be having lower low down. Are we getting the point? Here, this is the lower low, whether you like it or not. Here we have a lower low here. Now that means this was our last lower low. Here we have a lower low point. Okay? We are transferring the other knowledge to the real chart, such as that you understand. This is our lower high, and this is our lower low, and this is the last lower low. We draw line at previous lower high, and we draw line at previous lower low. Now, we could see this market, we could wait and see this market moving up, slowly, up. Immediately after breaking this line, this one, automatically, that was the first high. That was the first high. So at this point, you can look at this point here as the first high. Now at this point, it is the first high. Now at this point down here, it is our higher low. Our higher low is there. So our entry is at this point. After breaking this line, we wait for the market to confirm that we are tired of moving up. We are now coming down. By coming down, we expect it to stop from here. Then next will be pushing up. It is like this, then this, down, then higher high, then higher low, then we move and form another new higher high. So for example, now our entry was supposed to be here at higher low, and we expect we enter from here, and the target was at previous high, which was around 10%. There you get out from the market. We are waiting for the market to continue moving up. From here it will go up and it will come back. It will go up, it will come back. When it doesn't come back, don't trade it. Don't trade it until we come back, until it comes back. I think I'm talking to someone. Now we have high number 2 here. This is high, another high, and this is another higher low, and we are entering again at this point, targeting the previous high, and we are entering the market at this point, targeting the previous high, which is 6%, and we are done. We are not exceeding here, though it is still following the market structure, but for us we are saying no, we are stopping at this point because of discipline. If you don't have discipline, you end up missing out trades. Like Eric.
So, Mr. Deus,
Yes, please.
like from on your second high,
Yes.
I can see it didn't touch again your first high. So there I can enter but open more margin calls in case it drops further.
It's touched. Let me show you. Let me zoom. From here, let me show you. Let me remove this. It is here.
Oh,
It's
okay.
touched
I
here.
can see it touched.
Yes.
Yeah, I've
But
seen.
even though it stopped along the way around here, you can enter knowing that at least it will touch the right, then it will move up. Meaning there, when it is dropping, you are collecting, you are adding more money by buying margin calls. Okay? And after, now it is raising, it will give you more profit.
I get it now. Kaza Vikekati.
Ulira Philip. Okay. Do you have anyone who is lost? I think we transferred the knowledge from the drawings that you normally call smanye graphs. Then we were trying to put this drawing to the real candles. Hey, these are real candles, and we can we wanted just to identify where is our highs, where is our higher lows, and other things. Okay, so that's what we wanted to understand from here, and at least you can have the picture in your mind that we normally follow this to make money simple. As if someone is in need of help. Do you have anyone having question? I think no.
Yes, good morning, Cross.
Yes, how are you?
I'm good. You know, coach, for me, I always want to follow the market. Sometimes the market is pumping, and I can't just be there waiting for the market for retracement because some can just pump without making any reversal. So I'll be like,
now
let me
now
just end.
you
Oh,
also
it's
decide
pumping.
and say, let me run with you.
Yes, let me just chase it. So apart from having enough margin calls,
Hey,
which other advice would you offer to me?
apart from margin calls.
Because sometimes you be like I use Fibonacci,
Mm.
but even there are some confusion just there. Sometimes it crosses above maybe 100% line or 0% line. So for me, I'd be like, let me just push with it. Sometimes I end up crashing myself. So just give me some advice.
I think without margin calls, I don't have any other advice, because when the
But
market is
my
pumping,
margin calls, I have enough margin calls.
mm-hmm,
but I didn't want to crush myself because njagala sent. Because you know, market better a portion that you feel excitement.
Ah, Eriki sasa. Ah, okay.
So nkosenga Fibonacci ku point chiwemba nga kati one at least wano.
Kati olweggulo ngenda kubasomesa ku Fibonacci wetugenda ogifollowingira. Olweggulo don't miss out. So
Ekiro
para we can't mix up abantu bayinza ogaba nange kiki kino kati tuvudde ku drawings, now we are in Fibonacci. Oh, things
Yeah,
are not
I'm sorry.
are not online, so we have to deal with one. We finish it, we go to another one. Okay, so now
Okay.
I think I shared this coin in the morning. It is called STG. Yes, STG. The reason why I shared it, and now you can see now here we had what we call the double bottom. Now here we touched and move up, and again we touched. Now the one who was asking about demand, now this is definitely a demand zone at this point. This is demand zone. Demand zone. Where are you? This is a demand zone because we have the supply at the top. Supply is always at the highest level. Now this is the supply because it is where the market is. It is where the market started from here, to drop. It is started from there. So meaning this is our supply level. This is our supply level. I think Inasos was the one asking it. I don't know. I don't remember where. So that is the supply, and this is the demand. And the market one day will go to the supply. Whether you like it or not, it will go there. Okay. Now here we can see that the market is in uptrend. Here the market is in uptrend because of this point. Because of only this point. Because this point failed to break this one. It closed above it. Therefore, it respects the what? The structure. Now here, it is the lower low. This one is not lower low. And it is not higher low. Are we getting the point? That's what they normally call fake out. Now this is the fake out. Because it failed to break here, this level. And we form another lower low. Therefore, if it stopped from here, that means it is not a lower low and it is not a higher low. Period. Now, whenever we find out the failure, what comes into your mind? Just know that if we move up, we are forming high because we failed to form lower low. Hope my point is clear. Whenever you meet a failure, market failed to break, and we move up, even though we don't break here, this level of the previous lower high, but we failed here down, we don't expect market to move from here and again come back and break. No, that is not there. So therefore, this was our high, number one. Down, up, down, then up. So this coin, the reason why I shared it in the morning, so my target was this. This was the previous high, and even though we entered late, but I knew that this market is supposed to break to break this highest week. I don't know whether you are seeing this week. The week is here. This is the week I'm talking about. The week is this one, this Kasmoro stick. It is the week. So I was aware that since we are coming to break the high, meaning the top of the high is where the wick stopped from, whereby it was here. I don't know whether I'm making sense. That was the level of the previous high. So we are supposed to break it. And when I turn on my fib, it was showing me that it is going to break the zero. Though sometimes back we tested the zero, we passed through it, but we never crossed above it. So market came back at this point. Then I saw it closing above zero. Then I said, wow, this is the nice trade. Automatically is going to give us our 3%. Are we together? So that was it, and that's why I shared it in the morning. So when you follow it very well, this is a trend line. Whenever you hear someone talking about trend line, it is a trending line, a trending line, trend line. So we use it as support as well, mostly when the market is in uptrend or downtrend. We use these lines. We use these lines. So this one is working as support. It is working as support. As you can see, the market is moving on it from here, then up to here, then back here, then here, then again here, then here, like that. It keeps respecting it. Are you getting the point? It keeps respecting this area. It means the market is trying to recover from downtrend, trying to form a new uptrend. We are looking forward to see, to cover this gap. This is a gap here, because it is where the market had stopped from here, meaning there was something. So we have to come back at this point. Then from there we look at the next step, which will be this and this. We have two now, this one and the upper one. So we have 3 points, 1, 2, then 3. So we will go slowly. After coming and break this one, the first one, we must close above it. After closing above it, the next target will be this. The next target will be this. Then finally we hit our supply level. So whenever you want to take profit, please always check where are you taking profit from. Okay, ladies and gentlemen, allow me to stop from here. Next time we look at the downtrend. Today we managed to learn how we can enter the market in uptrend, and I think we have picked something. Okay, I think we have picked something. The diagram is here. If you want to take a short screen and you keep in your phone, you keep revising, the diagram is here. We have this, which is uptrend. You can take a short screen here, such as that you keep remembering what you need to follow from this point. Now this is uptrend. Let me write there the word even. Uptrend. Uptrend. That is uptrend. So you can take a short screen when the keyword is there, such that you can always differentiate the two. I think we are done with taking the short screens. If we are done, then we are going to transfer this keyword to here again. Let me remove the downtrend. Now on real chart, can I put the entries also, such that it can be clear? Before you take a short screen, let me write entry 1 and target. I'll put target as well. Target here. Target. That is our target. And here we have another entry here. Don't get confused. Entry 2. Then its target now, it will be where the market was coming at this point. Target. Now for sure, what do you demand from me? That is it. Let me even remove this to make it clear. Okay, take a short screen and I will welcome your questions. If they are not there, we call it a day. Are we done with taking short screen? That is a down and uptrend. So just understand the concept and you will enjoy for the rest of your life. Because after understanding this, the business will be as simple as possible. Hope
Mr. Dev,
yes, please.
first put back that whatever. I asked something. Where you put a lower high. Between that lower high and the last lower low, I see some other points that qualify to be lower highs.
But they don't have lower lows. That is the reason why they are not lower highs.
Oh,
This
okay.
one, you are talking about this, I believe. Let me show you.
Okay.
Okay. You are talking about these weeks. This one. You are talking about these 3 weeks. These ones, they are not having low. Are you seeing any low? They are straight. Are we seeing any low here? Nothing like low. Nothing like low. Low is this. Low is this. Are you getting? We have week here which is showing that this is a low. And after forming low, it will have to do what? To move up and form lower high. And drop down with a wick. And again up. So it's like this. This is a lower low. This is a lower low. Are we getting the point? So that's why these ones are not lower lows. These ones are not lower highs. And here we don't have any low. Up to here. We have low here. And we have low here. Nothing like low here. Are you getting the point?
Yeah, I get it. I get you.
So that is it. So the rest you are okay. Mr. Manuel, are you okay?
I'm okay, but I've not been seeing your screen.
What was the problem?
I've gone out 2 times now and come back. I can't see the screen.
Oh my God, sorry. But on YouTube, I think the class is there. You will rewatch it.
Screen is visible.
You get it? You will watch it again, okay? Fine. Sorry for that.
Okay.
Oh Manuel, sorry, Bambi. I think we have to wait. This was Griffin saying, I think we have to wait for a confirmation of breakout candle after breaking our support line. Automatically we have to wait for confirmation. Yes, immediately when we break the line forming a new higher high, then we have to wait for the confirmation candle which will respect our support line, and there we enter the market. So from there we can look at this point here, that at least here we had what we call the pin bar. Yes, when you look at this point here, we have a clear pin bar showing you that the buyers are taking over at this point. So you could target that and enter the market as well. So here as well here, this was our first entry. Then okay, first entry here, then second entry here, and here we could wait for this 1 or 2 green candles to cross above this line. And I had told you sometimes back that at least don't keep on 4 hours when the market is testing your support. When the market is testing your support, you can go to 1 hour and 30 minutes to confirm the confirmation on your line, so such that you can get the RA entry. Hope I'm clear on that. Yes, after forming the higher high, when it is coming down and you expect it to test the line, go to 1 hour, go to 30 minutes to confirm the RA entry, and you can enter the market from there. Okay, I think that is it. Let me hope you are fine with that, and allow me to call it a day. We meet in the evening, we talk about the down trade. James Kagwa, the YouTube channel is in the group, even on our champion group. When you click on description, yes, you will find there our YouTube channel. Yes, it is always there, and you can always follow up if you miss out the class. In most cases we record and we put it there, such that if you are busy in the morning, you can go and watch what we talked about in the class. Okay, so that is it, guys. Let me wish you a blessed day. We meet in the evening, okay?
Coach, before you go, what local issue, Jeff?